for 5 minutes.
I thank you, Mr. Chairman, and I thank our witnesses. The United States is a country of entrepreneurs and innovators, trailblazers who turn ideas into successful businesses, mom and pop shops, and they grow from literally a single store into thriving enterprises. These are the individuals who have made the United States the strongest economy in the world, and their hard work deserves our support. The truth is, however, that capital is not easy to access for many small businesses across the country, especially in the Midwest. I hail from the show-me state of Missouri, so I know, and other regions away from the big cities on the coast. As chair of the Capital Markets Subcommittee, one of my main goals has been to address this lack of access. As you said earlier, Mr. O'Leary, it's the whole deal, access to capital. That's why I led the INVEST Act, a package of 22 bipartisan bills that will strengthen our capital markets, expand investment opportunities for everyday Americans, and provide greater access to capital for Main Street businesses. Mr. O'Leary, as an angel investor on Shark Tank and the chairman of O'Leary Ventures, you have invested millions of dollars in dozens of companies located across the United States over the last 16 years. In working with early stage startups, investing both your time and money in up-and-coming companies, you have direct experience leading with the challenges that these businesses face. Mr. O'Leary, when you work with early stage companies, what are some of the main challenges you hear about gaining access to capital?
Between 1 and 5 million in sales, it's virtually impossible today. It really is. And the challenge is that right after about 1 million, when you stop selling your grandmother and your cousins the product and people start buying it because they want it, maybe you've been successful on social media acquiring customers, that is the time when you want to support these nascent entities because they have proven their product. So one problem is when they get to 5 million, is what generally they need to expand both on the employee base and they need more capital for inventory, because that's just at the time when the large big box retailers, which still represent 50% of sales, including Amazon, require inventory, and they're not going to receive cash on that for 60 days. That's why I talked about the factoring market. There is another problem, and I brought this up when we were having China hearings. Exactly at 5 million of run rate on Amazon for any American consumer good product, that is when the Chinese knockoffs hit. And what you see, and it comes on Alibaba, that IP is stolen, and I've been talking about this for years.
Well, I don't have time to let you talk about it for years, sir.
Yeah,
so,
and it's stolen, and it shows up at 60% the cost of the innovation.
I hear you, and we have addressed some of these issues in the INVEST Act, and you mentioned the INVEST Act in your written testimony. And from your experience working with companies that rely on private market investors, how could the reforms included in this package help unlock capital, increase competition, and improve options without requiring additional government intervention or a subsidy?
Probably 40% of the friction is the regulation and the challenge at the regional bank level. It really is. If you could get that red tape gone, if you could deregulate it, make it easier, most of these communities would support their entrepreneurs. Even in small towns, they would do it because they can see the effect of growth. I mean, they watch these, whether it's a car dealer or a dry cleaner or a bakery, whatever it is, it's working.
And talking about growth, as other nations move aggressively to attract capital, the U.S. risks falling behind, and we are, if our markets remain too costly or inaccessible for growing companies. Mr. O'Leary, how essential are capital formation reforms, such as those in the INVEST Act, to maintaining U.S. economic leadership and driving long-term growth, as you have talked about?
Well, if you look at the data, 70% of jobs are created by the businesses you just detailed, and yet they virtually get no support in the large acts that are created, whether it's the Infrastructure Act or whatever in the last 4 years. I've read those acts. They're telephone books. There's nothing there for small business. And the point is, why would you not want to support at least, I would argue, 70% of capital should be made available to them, because 70% of the jobs come from there.
And my time's expired. I will
Gentlewoman's
yield
time
back
has
that we have done that in the INVEST Act. I thank you, sir.